Hey everyone, and welcome back to the channel. Robinhood just dropped its Q3 2025 earnings, and the numbers are absolutely explosive. We're talking record revenues, profits soaring, and user growth on fire. But here's the twist. Despite crushing expectations, the stock price took a dip. So what's really going on with the fintech giant? In this video, we're breaking down all the key metrics, the drivers behind this monster quarter, and the red flags that have investors a little cautious. Let's dive in. Robinhood Markets, Inc., ticker HOOD, is a pioneering financial services company best known for popularizing commission-free trading through its intuitive mobile application. Its core mission is to democratize finance for all by making investing accessible to a new generation of investors. The platform allows users to trade a variety of assets, including stocks, exchange-traded funds, ETFs, options, and cryptocurrencies, all without paying traditional brokerage fees. While its user-friendly interface and features like fractional shares have driven significant growth, the company's revenue model primarily relies on a practice called payment for order flow, or PFOF, where it routes customer trades to market makers in exchange for compensation. Founded in 2013 and publicly listed in 2021, Robinhood has been a disruptive force in the brokerage industry, though it has also faced regulatory scrutiny and has become synonymous with several major retail trading phenomena, such as the meme stock frenzy of 2021. First, let's get straight to the headlines. For Q3 2025, reported on November 5th, Robinhood didn't just beat expectations, it smashed them. Revenue nearly doubled year over year to $1.27 billion, blowing past estimates. Net income skyrocketed 271% to a massive $556 million. And earnings per share, EPS, came in at $0.61, significantly higher than the $0.53 analysts were predicting. This is a clear signal that the business isn't just growing, it's becoming wildly profitable.
So where is all this money coming from? The main driver was transaction-based revenue, which hit $730 million, up a staggering 129% year over year. But let's look under the hood. Crypto revenue was the absolute star, jumping over 300% as retail traders flooded back into the market. Equities revenue was up a huge 132%, fueled by the AI-driven stock market rally. And options revenue grew a solid 50%. But it's not just about trading. The company is successfully diversifying. Their premium gold subscription service saw users surge 77% to 3.9 million. They're also expanding aggressively into new markets like the UK with futures and prediction markets, which are off to a, and I quote, record start in Q4. This revenue growth is built on a rapidly expanding user base. The number of funded customers grew to 26.8 million, adding 2.5 million new users in just a year. More importantly, those users are entrusting more money to the platform. Total assets held on Robinhood surged 119% to $333 billion. This is a huge vote of confidence and a critical metric for the company's long-term health. And in a major sign of maturation, Robinhood officially joined the S&P 500 index in September, cementing its place in the financial mainstream. Now, let's address the elephant in the room. With all these incredible numbers, why did the stock fall about 2% after the announcement? Two key reasons. 1. Rising expenses. Robinhood raised its full-year 2025 operating expense forecast to approximately $2.28 billion. That's up from its previous guidance. The company cited investments for growth and, notably, stock-based compensation. Investors are watching to see if these costs will eat into future profits. 2. Key leadership change. The company announced that longtime CFO Jason Warnick will retire next year. While a successor, Shiv Verma, is already named, any C-suite shakeup introduces an element of uncertainty.
Robinhood is riding a huge wave right now, primarily fueled by the AI-driven market rally. Revenue explosion. As retail traders did back in the game, Robinhood is cashing in. Their transaction-based revenue is skyrocketing across equities, options, and especially crypto. But it's not just about trading anymore. New product lines like prediction markets and futures are starting to contribute significantly, doubling their revenue year over year. User and asset growth. The platform is growing. We're talking about nearly 27 million funded accounts and a staggering $333 billion in platform assets. Even more impressive is the growth in their premium gold subscribers, showing they can successfully upsell their user base. Ambitious innovation. This is where it gets really interesting for the long term. Robinhood isn't just a brokerage anymore. It's trying to become a financial ecosystem. They're building their own blockchain, the Robinhood chain, exploring asset tokenization, and expanding into banking services. If even one of these bets pays off, it could open up a massive new addressable market. Analyst optimism. Because of this, many analysts are bullish on their earnings growth for 2025 and 2026. Several firms have raised their price targets, pointing to strong operational improvements and the potential of these new initiatives. But every investment has risks, and for Robinhood, they are significant. The market dependency trap. Robinhood's business is fundamentally tied to market momentum. When the bull market runs, they print money. But what happens during a downturn? Trading activity dries up, and their transaction-based revenues could plummet. This lack of a diversified revenue stream makes them vulnerable to economic cycles. The regulatory sword of Damocles. This is a huge one. A major chunk of their revenue comes from payment for order flow, a practice that remains highly controversial and is constantly under regulatory scrutiny. A ban or severe restriction on PFOF would be a massive blow. Add to that the ongoing uncertainty and compliance costs in the crypto space, and you have a persistent overhang. Rising costs. Growth isn't free. Robinhood is forecasting higher operating expenses for 2025, partly due to stock-based compensation. If these costs rise faster than revenues, it could seriously squeeze their profit margins even if the top line looks good. Fierce competition. They're not alone. They're fighting off other nimble fintech apps while also competing with deep-pocketed traditional brokers. This intense competition challenges their market share and forces them to constantly innovate just to keep up. Some analysts are already warning that the stock's current valuation might be getting ahead of itself, posing a risk of a correction if growth ever stalls. In summary, Robinhood presents a classic high-risk, high-reward scenario. On one hand, you have a company leveraging a hot market, expanding its user base, and making bold, futuristic bets that could redefine its business. The growth trajectory and analyst optimism are very real. On the other hand, you have a business model that is highly sensitive to market sentiment, faces serious regulatory threats, and is spending heavily to fight off intense competition. Let's talk about the consensus. As of early November 2025, the overall analyst rating for Robinhood leans heavily toward buy. In fact, a significant majority, about 72% of covering analysts, are telling their clients to buy the stock. Another 24% recommend you hold, and only a tiny 4% are saying sell. On the bullish side, we have firms like Bank of America and Needham who have maintained their buy ratings with price targets raised all the way up to $145 to $157 range. Piper Sandler and Mizuho are also in the outperform camp, signaling they expect the stock to do better than the market. So what's the bottom line from all this analysis? The bull case is clear. Analysts expect Robinhood's growth to continue, driven by expanding retail trading, new product lines like prediction markets, and a surge in platform assets. The company is firing on all cylinders. What's your take on HOD? Are you buying, selling, or holding? Let me know in the comments below. Don't forget to like and subscribe for more deep dives into the stocks that are moving the market. Thanks for watching.